Alright, let's talk about what every Canadian homeowner is thinking about right now. Where are mortgage rates headed? And should I go fixed or variable? As of today, the Bank of Canada's policy rate sits at 2.75%. Now here's the twist. There's a ton of disagreement about what happens next. Some banks, like RBC, think rates are staying put until at least 2026. That means no more cuts for a while. But BMO and CIBC, their betting rates will drop to around 2% by early 2026. So what do you do with all these mixed signals? Let's break it down. If you're eyeing A, you'll want those rate cuts to actually happen. If the more optimistic economists are right, your payments could drop, making variable a cheaper option, at least in the short term. But remember, if the Bank of Canada stays cautious, you might not see much benefit. On the flip side, offer peace of mind and stability. If you're worried rates might not go any lower, or you just want to lock in now and forget about it, fixed makes sense, especially if you're watching RBC's prediction that cuts are done for now. Now here's the wild card: US trade tariffs. If the US ramps up tariffs, that could slow our economy even more, possibly forcing the Bank of Canada to cut rates faster to keep things moving. But until that happens, inflation and employment are what the BOC is watching most closely. So, what's my take? It really comes down to your risk tolerance. If you can stomach a little unpredictability, variable rates might pay off. If you'd rather sleep easy, fixed could be the way to go. Bottom line, nobody has a crystal ball, but knowing where you stand and staying informed will help you make the right call for your home and your wallet.